John Bennett, Fund Manager of Henderson European Focus Trust. In the last 3 months of 2014, how have European markets performed?
In a very dull manner. I think I was looking at it yesterday actually in sterling terms. It's virtually gone nowhere. Pretty volatile actually. I mean, the first half of October, markets had double-digit declines in Europe. Not every market, but you had double-digit declines in a number of markets. And then it made that up, and then December was a damp squib. So actually, point to point, Q4, it's gone nowhere. It's been a sort of nothing to write home about. And our portfolio has been nothing to write home about.
So I was going to ask you about the trust, how that has performed.
I guess in line-ish with the market. In share price terms, it's done better than the market in Q4, but in NAV terms, I mean, nothing to write home about, just like the index. It's a very short period of time, 1 quarter.
And activity in the trust, have there been any new purchases or?
Yeah, I think the most significant thing, there's 2 things, one at a strategic level and one at stock specific. Since the summer, so throughout the second half of 2014, we tilted to 2, and again, it's a tilt, it's not a lurch. We never lurch, we're never binary managers, we don't lurch, but we tilt. And we've tilted back towards 2 features, if you like, 2 characteristics in the market that I think are scarce globally. One, growth. So we've tilted back towards growth stocks, which are quite expensive, but we've tilted back to them. And income. There are 2 scarcities in the world. There's an abundance of debt, but there's that abundance of debt means that there's a lack of growth, or there's sluggish growth at best. And the central bank response to over-indebtedness and the debt deflation threat means that there's a scarcity of income. We have financial repression, we have far too low bond yields, we have negative bond yields. There's a gasp and a grasp for income. So we've tilted back towards growth and towards income. The second thing is stock specific. We have taken advantage of some real special situations in the market at a stock specific level. They've tended to be small mid-cap. There are not 10 of them, there's not 5 of them, but there's 3 or 4 of them. So names like Tessenderlo, IMA in Italy, and another Belgian business alongside Tessenderlo is a business called Warehouse Depot, which is a Belgian warehouse rental and logistics business. And in the case of IMA and Warehouse Depot, we get a very nice dividend yield out of those businesses, outstandingly well managed, family controlled businesses with great track records. And we got the opportunity on one of those, for example, to take a placing late in the quarter. And this is where the trust, in my view, is brilliantly positioned as a closed-end fund where I don't have to worry about positions being diluted by subscriptions or inflated by redemptions. I can be patient with some of these small mid-cap gems, special sits, in a closed-end fund where I don't have that luxury in an open-ended fund.
Okay, finally, John, I know this can be difficult, but what is your outlook for the coming period?
I hope to be wrong. I really hope to be wrong in 2015, and it wouldn't be the first time that I'm wrong, and I really hope to be wrong in 2015. I'm bearish. My outlook is bearish. I don't find a lot of bargains in the market. Give me 15% off indices and I'll change my view. But I, for one, happen to believe that the mothership of markets, which is Wall Street, is now very significantly overvalued. I accept that America behaves like a closed economy and it's seen as a safe haven. But of course, with that comes, in my view, a rather fanciful price. Doesn't mean to say that Wall Street has to fall in 2015, but I think the mothership that sets the tone for equities, the United States, is now significantly overvalued. Second, I see few bargains in my patch, Europe. There are people out there who say Europe is cheap. It is cheap, in my view, relative to other asset classes, but that to me is saying something about the other asset classes. They're expensive, in my view. And third, I think that throughout 2014, I guess I was cautioning and warning about the deflation risk. To me, that risk in Europe has gone up from 50% to 70%, and all of that together makes me extremely cautious going into 2015. I'm probably very wrong. I hope to be very wrong, and we all make 20% just by sitting in an index. I don't think that's going to happen.
John Bennett, thank you.